55, 63, 74, and 86. Pivot 34, resistance 46, 55, 63, 74, 86. Support below at 21, 10, 01, 40, 90, and 80. All right, market here reacting to the inflation CPI number. And I thought it was a little bit hotter, not hot, but hotter than expected on some fronts. Let's see. CPI, they were expecting it to come out 0.5, came out at 0.5. But the revision, which is I think why they hiccuped like that, they rallied at first, came out on target. As we break down here a little bit, looking at the 21 down below as support. It came out on target, which was the initial reaction, but the revision from last month, they came out at, it was minus 0.1, and they revised it to up 0.1. So that was a big revision as we quickly come down here to the 21 area here. Again, if it's a little bit too volatile for you this morning and you can't handle the volatility, I get it. So just be a little bit patient and wait for the market to settle down. Obviously, we're reacting to this inflation news, and the inflation is big news, and it's getting a negative reaction, at least initially, coming down here to the 21 area. Again, make sure you keep your stops in place. That's for sure, and see how the market reacts down here against the 21 area. And you might have to extend your stops here just a little bit, just because of the volatility. So trade it accordingly. All right, come down here a little bit, testing this 21 here a little. Again, the first bar always a little bit more volatile. Again, not a surprise. And the first bar being, especially after this number and after they kind of, again, they kind of rejected it off the bat. And then you get the traders who are coming in who start trading it, get a little bit more reaction, more volatility to the downside. And like I said, it was a little bit bearish in my mind. But what do I know? And whatever you do, keep your stops in place. 1 second here. Coming down to the 10 area next. All right, so we having a little bit of pressure here. I mean, so the headline, I mean, the revision was the issue there, right? I think, and maybe the initial, everybody saw the initial, and then the revision comes out, and then they completely reverse course, like bond market did as well. Year to year, they were expecting 6.2, came out at 6.4, so another miss there a little bit on the year to year. If you take out food and energy, they're expecting 0.4, came out at 0.4. So that was okay. And then year to year, food and energy, it should have, they were expecting 5.5, it came out at 5.6. So a couple hot spots there for the numbers, and thus the negative reaction here. Like I said, I don't know why they popped it up, and that's why it's very difficult to trade those numbers, because I probably would have looked at these numbers and said, oh, they're bearish, and but until they rally it, they popped it all the way up there to 40, almost 41.90 area there, and then come breaking down. So how do you handle the risk here? You can expand your entry points. You can lessen your the number of contracts you're trading so that you can manage the trades a little bit different. You definitely have to take that into consideration, the volatility with these numbers, especially inflation numbers, and especially since they're hot. That means going down to the downside. We always talk about more volatility when the markets go down, and this is what we're getting here. As we dip down to 14 and change and come back up. All right. So again, managing your trades and the volatility is very important. Trade smaller. Do not overextend and be patient with it. Make sure you keep your stops in place, and that way you can maybe stay with the trade a little bit longer, and or scale in a little bit differently. Only because it just matters. It just means that there's more volatility at this moment, right? I mean, the volatility could be sucked out of the market at any time as well. Bonds here on their lows. Again, that's not, but they're on their lows, but they're just down marginally. Not so bad. But the 10s are down more than the 30s, which means that the yield curve is expanding negatively again. So that's not good as far as those concerns about recession come back into play. We're just kind of hanging around this 21 area here, even though we went down to 14, came back up here. So we got 10 as our next support level. And we'll see where it wants to do there. Terrible what's going on there in what went on there in Michigan State last night. My daughter was in Michigan State, went to Michigan State. It was a little bit too close to home for her and for everybody, actually. It doesn't really matter. I mean, I don't understand I don't understand these people. Had no affiliation with the university and wasn't a student. He was 43 years old and didn't work there. So it just like goes and shoots kids. It just doesn't make any sense. I don't know. Doesn't make any sense. All right. Let's see here. See what else is coming out this morning. That's the big news. I don't think anything else is going to push the market too much. CPI number, that's about it. We'll trade off of that. We'll see how the bond market reacts. Eventually, you can see here they're definitely weak. Those are 30s. The 30s are on their lows, but they're down just a little, and some 10s are down a lot more. So it means the yield curve is expanding to the negative side a little bit more because obviously the concern here is that the Fed is going to continue to raise rates longer, maybe more, or another quarter point, because they haven't gotten that under control yet, even though it's not, I guess, it's not a terrible number, but everything is within line. But the revision was bad from last month. So we'll see what happens. So no other number is coming out this morning. The U.S. Federal Reserve will be closely watching today's release of the Consumer Price Index for January, which will gauge how well the central bank is faring in its fight against inflation. Um, so we'll see where that brings us. All right, we just kind of hanging up here. Came back off of the lows there at 14. I would just pushing back a little. I would say looking at the 46 area is our next area of resistance. Uh, don't really have any feel right in here, one way or the other. So no other numbers coming out today, and we'll see where we're going. Coming back up here to our pivot. Like I said, I got no feel for the market right now. Bonds coming back as well. Maybe they're kind of trading off of the bond market a little bit. We go right up to our pivot area here at 30. Well, no, pivot is at 34. A little resistance up there if you were a little aggressive. Again, if you were a little aggressive and took our pivot rotation, got up to 33 and a quarter there. And kind of coming back down here a bit. So these volatile days, volatility, they inject it into the market because of, news are tough to trade. Just like when it gets slow and very difficult to trade when it rallies, you see how slow it was yesterday afternoon, and you just have to be patient and wait for the market to kind of settle down a little bit and let it absorb the news, and then see how it's going to react to it. And especially in the first, the morning after the news comes out, like the next time we have the PPI number, which could be either tomorrow or Thursday. They usually are backed up on each other. I'm not sure when they're going to come out with that, but it's either tomorrow or Thursday. So you're always going to have an initial reaction, just like the market did there, and a hiccup to the upside, and then back down to the downside. All right, we got 40. I got 46 is our next area that I'll be focused in on as some resistance. And if you look at the chat, you'll see the levels there for you that we just put in there. Those are used as a guide to the day. Well, technically, just like it was technically into a bear market, like I said, technically, I think we're out of the bear market into a bull market, right? Because of the 20% from highs or lows that they look at to generate their logic between bears and bear market and not. So I don't know. Yeah, I mean, this is we're definitely range bound, right? I mean, we are moving around, but really 42 to the 40 area. We can go back and look and see how long we've been in this little range here for a while. So we have to just be patient and wait and see which way it's going to break out. It's consolidating here. The Fed did their thing. They see that the Fed is coming to, the movement there. The Fed is slowing down. But are we going to have that soft landing or not? Is the question. Or I mean, bond market, like I said, is definitely not indicating that. But have a discrepancy between the bond market and like I always say, the bond market usually right. So we'll see. Level of resistance up here is at 46. We had 21 down there. They rotated down to 14 and then popped it back up here. Now we're coming back up here after the initial first bar rotation. They overreacted. And like I said, the first bar is you got that little volatility in the first couple bars, and then the market kind of settles down, and that's what happened here. They kind of maybe doing the same thing. They overreacted, and now they're got themselves short. Now they're popping this thing back up here. So we got resistance up at 46. We can see our green band coming in there at 47. Our blue band's at 45. So we have some levels of resistance up here. We're coming up here to this little area, a little bit of resistance around. What it wants to do up here. We got a whole bunch of resistance right in this area, so see if it reacts to it or not. Anything above 50, you want to be out of any shorts. And a nice little rotation here against that. We got layers there of resistance. It got right up to 45 there. We did have 44-ish was, our blue band area comes in at 45. We had 46. The green band is at 47. So a little resistance in this area, got up to 45 there. Maybe you jumped in there against a 45. Still on the same bar if you're thinking about a level. And yeah, we talked about the multiple reasons to get into that trade right there. Maybe some of you jumped in against the 46. And remember, we said we have to expand our stops a little bit, or expand the entry points because of volatility. But hopefully, somewhere in there, you were able to jump in. And a nice rotation here against that first resistance area. We didn't get up to 47.6, but we did get up to 45. We talked about the blue band there at 45, so you had to get in there someplace maybe at 44 because you have to take that into consideration. I said earlier, you definitely have to expand your entry points a little bit with your scaling because of the volatility. And so maybe you were able to jump in there and take part in. Now the 46 right now or the 47, it's a little bit more risky. If you're going to take anything up there right now, I would anything above 50. You want to be out of any shorts. So 50 is your exit strategy for any shorts if you want to get short in this area here. The settlement price is around 47 and change. So there's so let's just say anything above 50, you want to be out of any shorts. So if you're going to take anything up here again, even though we kind of got triggered against the 45, it's a little bit riskier, but you have an exit strategy. All right, it's a nice little rotation up here. This time we got up to the 46.50 and then coming back off. Again, 50 or above, out of any shorts. There's a few reasons here why you could have gotten short there still. Like I said, the settlement price is 47 and change. So green band's coming in there. This area is working very nicely, and there's again reasons to get into the trade. We talk about having reasons to enter our trades all the time, besides the levels. And the levels are if they match up with some other price action opportunities, then you like them better. All right, nice rotation there against that area. We gave you an exit strategy above 50, so you definitely had a reason to maybe get in, and you knew where your out was. All right. Okay, nice little trade there, even though we kind of got run over there against our 21. Hopefully we're able to make some of that back here with the 46. And now we're looking anything above 50. We might have a rotation to maybe the 55 area. If we get above 50. All right, coming back down here off of that our 46 area. All right, the little support at 34. All right, quickly jetting up here. Resistance, the next resistance area would be at the 55. It was a quick rotation, right? Very quick rotation. We said anything above 50 out of any shorts. So that was a. I was thinking of getting down to the 34, and then I looked away and looked back here. It's like popped it right back up. Did not expect that. We did not have anything up here, so we're looking at 55 area. The settlement price here maybe a little support if you're a little aggressive. So I just wait for the 55. All right, coming all the way up here to the 55. We suggested a little buying opportunity there against the settlement price. If you're a little aggressive, came down to 48 and change. Now coming all the way back up here to our 55 area. Again, we have to watch the price action and then react to it accordingly. All right, coming up here to the 55 area now. If you did get long down there, nice little rotation up here. I mean, I don't know what happened here over the last 10 minutes or 5 minutes, but they reverted really quickly. Again, it was a little bit of a buy there against the settlement price, like I mentioned. If you were a little aggressive, now we're testing this 55 area. If you don't like the price action, you can always lighten the load here a little bit. And you have to, we talked about above 50, looking for 55. We got that, and we dipped after we got through the 50, came back down to the 48 area, and then we maybe suggested a little bit of a buy there. And again, there was a price action opportunity. Looking for the 55, and nice rotation here against the 55 area, giving us couple points for sure. Trying to give us a little bit more. All right. So now giving us a little bit more than giving us 3 points here. Again, if you're trading the ebbs and flows, all we're trying to do is take advantage of them. We got our first resistance on support on the downside. We kind of got run over on, but then after that, we've been doing okay. We've had some price action opportunities along the way. To give us a couple extra trades. So the volatility is giving us opportunity, but you have to just wait for it and just kind of let the market kind of do its thing. And then wait for the opportunity, wait for the market to give you a reason to trade. All right, nice rotation there against the 55 area. Next level on the upside we're looking at is 63.